Hi guys, welcome to another episode in the Forex course for beginners. If you watch this for the first time, we have already completed a few videos in this series. Please watch them first, then you can understand this video well. In this video, we're going to discuss the A plus setup, like how to identify the setup in the live market. How can we confirm the setup? I mean, what type of candlesticks should form before our entry candle? How much win rate it has in live market according to my experience? Does it have an edge only in the Forex market or any other markets? And it types, like in how to identify the setup in downtrend, or how to identify this setup in an uptrend. And moreover, we are also going to discuss the live market examples. By explaining these examples, we're going to add the perfection to this video and to the concept. Hi everyone, I hope everyone is fine. Welcome to our channel. If this is the first time you come to our channel, please watch our previous videos, then you will understand this topic well. I will leave those videos and playlist links in cards. Okay, without wasting our time, let's get into the topic. Here is the topic. Okay, another video in the free Forex trading course. As I said in the last video, the most important setups in Forex trading are only 8 setups. So in the last video, we discussed the counter trend setup and its types. And also we discussed how to identify them in the real market with live examples. So in those 8 setups, today we are going to discuss the 5th setup. For simplification, I divided this topic into 6 chapters. Don't skip any chapter. All chapters are important. Let's see what those 6 chapters are. Here they. The first chapter is the A plus setup. The second one is the confirmation candle. The third one is the rules. The fourth one is the examples of A plus setup. The fifth chapter is the fake counter setup. And the last chapter is the second entry. As we know, here the second and the final chapter titles are the same for all these 8 setups. So if you don't know how to identify the confirmation candle, we clearly explained in this video. Please watch that video. So let's move to the first chapter, A plus setup. What is A plus setup? A plus means that entry is taken in the trend with proper confirmation. We can also call it a king entry. Here the A plus entry is divided into so many types. That was an advanced concept. We will discuss that later. So let's discuss the theory behind the A plus setup. See, here the candle breaks the structure and closes above it. Why this setup is very important. Why did the next candle close as a bearish candle and within the previous candle range? All these questions will be answered soon. Let's see the micro details of this setup. See, this bullish candle breaks this bearish candle high. Then it creates a price of interest zone. We called it an entry zone. When the price came to this zone, there were higher chances to continue the counter trend. This is the actual price action theory, but every zone must not be respected. So when the price came to this zone, higher chances to continue the trend. Why does that happen? Because after this zone created by the A plus setup, it is valid, price will respect it in any condition. Big players and institutions wait for this move and then they enter the market. But every zone must be broken. So when the price breaks that previous candle high, then there will be higher chances of the price moving favor to us. Why does that happen? Because after this candle is broken by the entry candle, then the uptrend is valid. Price will respect it anymore. Big institutions waited for this move and then they entered the market. We just follow their move and grab some profits. That's it. Okay, I think you understand the logic behind the counter trend setup. Let's see how it looks like in the downtrend. As we see price moving downwards, this bearish candle breaks and closes below the support. But suddenly, this bullish candle closed within the previous candle and grabbed the aggressive seller's stop loss. Here the point is we don't know the price ranges. We have to wait until this liquidity candle formation. As we discuss, this move is called A plus setup move. If you see this move, please wait until the entry candle is formed. So this bearish candle breaks the support and closed below it. And the next candle closed as a bullish candle and grabs the seller's liquidity. After all this happened, the entry candle formed here. Do you know what it did here? It grabs the buyer's liquidity. But how? You know the aggressive buyers are entered here. Their stop loss will be here. But this entry candle hit their stop loss and moving downwards. Then see how the price moved in our direction. So this is how it looks like in a downtrend. This is all the theory of A plus setup. I think you understand that. Let's move to the next chapter. Our second chapter is the confirmation candle. Why should we wait for the confirmation candle? Is it mandatory to take trade after the confirmation candle is formed? Yes, it is mandatory. Otherwise, higher chances to lose that trade. The confirmation candles are must for every setup. If it does not have a confirmation candle, it is considered as a fake setup. Okay, let's see how to spot the confirmation candle in the A plus setup. Let's assume that price in downtrend. How its structure should look like. It is moving downwards by forming lower highs and lower lows. For simplification, let's zoom in this structure. See, this is the low, and price gave a small pullback and continued in our direction. The move is our target, means we have to grab this move. But how? That is the big question mark. Then what happened after this pullback? Price again came to this support. How this happened? Let's change it into candles. As we said, this bearish candle breaks the support zone and closed below it. And further, the next candle closed as a bullish. And again, next candle formed as a bearish. So here is our point. Can we grab all these moves? The answer is no. We have to grab some selected moves only. Here the point is how to identify the perfect move, to follow the rules. But what are the rules? I will tell them in the next chapter. Okay, let's get into the topic. Here, where is our entry point? This is our confirmation candle. Why only we choose this candle as our entry candle? If you know why, then comment below. If you don't know the reason, I will tell you. See, this bullish candle closed with in the previous candle. This is our entry candle, and this is our entry level. When this candle breaks the low of the confirmation candle, we will take entry there. And see, price moved in our direction. Okay, I think you understand the logic behind identifying the confirmation candle. Let's go further. See, price moved in our direction. Okay, I think you understand how to identify the confirmation candle in a downtrend. So let's move to the uptrend. Why am I explaining everything in this setup? Because this setup is so important. That's why I'm explaining every micro detail. I want you to learn everything I know. So let's move to the uptrend. So this is how uptrend looks like. See, this is the higher low and this is the higher high. This consecutive formation of higher lows and higher highs is called uptrend. Let's change it into candles. Here we go. See, this is how it looks like in candlesticks. It is clearly an uptrend. So the price broke the resistance zone. A bearish candle grabs the buyer's liquidity. So here is our confirmation candle. Because it closed within the previous candle, this is our confirmation candle. What next? Identifying the entry level. This is our entry candle, and this will be our entry level. Boom. Price again moved in our direction. That's it. You can use this setup in any market. So I think you understand this chapter. If you don't get the point, please again watch this chapter. So let's move to the next chapter. The third chapter. Rules. Are those rules important? Yes, settings rules are very important because we are humans. We make mistakes if there are no limits. And emotions will play with us when you want to take higher risks. Setting rules to your trading is very important. Here I forgot another point. Rules are changing for every setup. Remember that. You have to remember all the rules. So, let's see the rules of the counter trend setup with examples. So I merged the examples chapter into it. These are the rules. What? There is nothing to see. All rules are blurred. Yes, I intentionally blurred them. Here, the main problem is how to execute and when to execute the A plus setup. Let's see the first rule, timings. In the Forex trading, entry timings are very important because volume came in only some particular timings. I already explained it in this video. If you don't watch it, please watch it now. You can understand it well. We trade only high volume times like in session overlaps, sessions openings and closings. Let's see our first example. See, this is our first example. Can you identify the trend? Yes, the trend is up. You may ask me, how can you tell the trend by looking? But many said that the trend can be identified only with the moving average indicator or RSI indicator. That is not true. Indicators are for beginners, not for professional traders like us. If you want to become a professional trader like me, so just follow me. Our rules are simple. We can identify any trend by two factors. Is it forming higher highs and higher lows? Is it forming lower lows and lower highs? And the higher time frame of the entry time frame, as we see this image. The price forming higher highs and higher lows. And for more confirmation, let's move to the higher time frame of the current time frame. See, this is 4-hour time frame. This is our resistance in entry time frame. So it can be said as uptrend. So I think you understand the logic of identification of trend. As we said, it is an uptrend. In uptrend, we are only looking for buy entry. Why only buy entry? Why not sell entry? Because the trend is our friend. So that's why we're only looking for buy entry. This is our second rule. This rule is for beginners only, not for professionals. The experienced people can take trades against the trend because they know which move can give you profit. So if you have enough experience to take trades against the trend, that's up to you. Go on. Take risk. Life is about taking risk at correct time with correct managing skills. Okay, let's move further. This bullish candle breaks the resistance zone, and also it closed above the zone. What does that mean? It means our uptrend is valid now. After that, this bearish candle formed within the range of the previous candle, and it grabbed the stop loss of buyers. So our third rule is wait until the liquidity candle formation. And this candle is officially our confirmation candle. That's why this candle respects this zone. Remember one thing. This candle has a healthy body. That means sellers are getting strong. And this is our confirmation candle. Let's talk about the next candle. It may break this confirmation candle high, or it can break its low. So wait until the move happened. So see, this candle breaks the high of the confirmation candle. So what can we do now? This bullish candle breaks the high of the confirmation candle and also moving upward. So we can consider it as an entry candle. So here is our entry point. We entered a buy trade here. Our target is at the next resistance. We can trail our stop loss, and our stop loss is at the previous candle low or the entry candle low. Let's move further. Wow, see, we win this trade. This is called pure price action trading. Again, I will explain briefly. First, a resistance formed. Second, a confirmation candle formed. Third, we entered here and setting the target and stop loss. And the results are awesome. Isn't amazing? Okay, this is our first example. Let's move to the next example. Okay, this is our second example. It is in uptrend because it's forming higher highs and higher lows. So this is our uptrend move. Let's see how it looks in higher time frame. See, this is the higher time frame of this move. This is the upward move. Let's imagine the move. How the perfect move can be formed in a higher time frame. Connect all the roots. Definitely you will get the answer. Okay, let's change to the lower time frame again. See, this candle breaks the resistance and closed above it. So this is our pre-confirmation candle. And move further. See again, one bearish candle formed within the range of the previous candle. So this is our confirmation candle. And this will be our entry candle. And this is our entry point. We entered here. Our target is at the next resistance zone. And stop loss is at the current candle low or previous candle low. See, the results are awesome. Okay, I think you understand well with these two examples. So, let's see another example. This is our third example. It is in downtrend because it forms lower highs and lower lows. So this is our downtrend move. This candle breaks the support and closed below it. So this is our pre-confirmation candle. It looks like same as the previous example. I am telling you from the beginning. Forex trading is simple. Not only Forex. Trading in any market is simple. But you have to be patient. Okay, let's see the higher time frame of this. See how this move looks like in the higher time frame. This is our downtrend move candle. That's why learning the multi-time frame analysis is very, very important. Let's shift to the lower time frame again. See, and this bullish candle will be our confirmation candle because it closed within the range of the previous candle. And this is our entry point. We entered here. Our target is at the next support zone. And stop loss is at the current candle high or previous candle high. The results are awesome. Okay, I think you understand very well. So let's move to the next chapter. Our fifth chapter, Fake A Plus Setup. I know you are thinking that this setup was also so simple. I can make profits every day by trading this setup. Okay, wait, this is not as simple as you think. Big players always make traps for retail traders. We have to prepare for them. Up to this point, I teach only how to identify this setup and how to enter in this setup. But now I will teach you how to not trade in this fake setup created by the big players. Out of 10 setups, at least one setup is a liquidity grabbing setup. We have to identify them. So let's see the most untold secret of setup. I am directly teaching this with live examples. Let's see our first example. Here it is. See, price in uptrend. Our resistance zone is this. It formed by our counter trend setup confirmation candle. And this bullish candle breaks this resistance and closed above it. what it indicates. This is a liquidity trap for day traders. Moreover, the next candle breaks the high of the pre-confirmation candle and again came back to the range of this candle. It indicates that an intense fight going here between sellers and buyers, so lower chances of price moving upward. So we usually avoid this setup. This is not a valid confirmation candle. If you are an aggressive trader, you lose this trade, so better to avoid these traps. Okay, let's move to another example. Look at this. Price in downtrend. Our support zone is here, and it formed by this bullish candle. What it indicates? It's nothing but our counter trend setup move. But it failed, and this bearish candle breaks the support and close below it. What we do generally? We wait until the next candle formed within its range, and it breaks and doesn't move upward. And it also closed within the range of pre-confirmation candle. So usually we avoid this setup. You have to manage your risk. I think this is clear to you. Sometimes losses are good because there is a lot to learn from mistakes. They are liquidity traps. Let's move to the next chapter. This is our last chapter. Second entry. What is the second entry? Actually, this is an advanced topic, but it should be explained in this video. Okay, when you want to take an entry in this setup, even there is a good confirmation of the price moving in your direction, it may hit your stop loss and come back to entry and then move to your target. As I said in our risk management video, we have to close some partials when the price moves halfway towards our stop loss. And when this price comes back to entry level, we again enter with half risk. And our target is same as previous. Like this, we are filling our risk. So second entry is not recommended to beginners. That's why I called it an advanced concept. First practice it in simulation, then execute it in the real market after you master it. Practice it in simulation. If you watch this video up to this, I think you might like my videos. Please subscribe to this channel for more content like this. Share this video to your trading friends. Click on bell icon for faster notification when I uploaded videos in this channel. Thank you. This is the end of the video.